Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 7th. Michael Boutros here with you today, guys. Good to be with you. On the back of yesterday's Aussie RBA interest rate decision, some interesting price action. We didn't get the pullback as steep as we wanted to in Aussie, but you did see that topside bias continue to play out. We'll talk about setups also in Euro Oz, which finally turned over rather. We've been looking for that one for a while, finally seeing that start to pan out. Euro Dollar, no change on that outlook. Looking for the pullback there as well to offer some long exposure. Sterling right up at resistance. So exactly as we had expected last night, the Brexit polling, which charged that major decline early in the week, tad overdone. And you did see a topside break. Now, the severity of the rally, guys, you can throw it, an explanation on that for whatever you'd like. Bloomberg was reporting that it was algos. You had Reuters reporting that it was a fat finger. I mean, we can go on and speculate for whatever cause. The technicals were pretty clear that this thing was a little stretched. So you did see a topside pop. That's testing near-term structural resistance. So we'll talk about that. And the Kiwi Dollar still in that upward slope from last night that we highlighted on the radar charts. You do have the RBNZ interest rate decision on tap later this week. So certainly we'll continue to track that one. As always, feel free to throw out any questions, trade setups you'd like to review. Eileen, always a pleasure. Francis, Graham, Hussein, Kelly, Mark, Medad, Mario. Good to be with you guys here this morning. Hey, Adam, good to see you in the room. All right, let's jump right into price action. Relative performance for the greenback looks like this ahead of the U.S. Open. You have the Aussie, which is the top performer on the session, up 0.96%. Again, yesterday the RBA held interest rates, and while that was broadly expected, you saw interest rate expectations really drop, and I'll show you that in a moment. I kind of highlighted that yesterday, but we'll take a look at it. Worst performer in the session, Japanese yen, slight decline of 0.11%. Same on the euro with a fractional decline there. Okay, let's jump right into price action. We'll come back to the dollar index let me do this first, I guess. The dollar index, the only thing I want to highlight here is that August low day close from last year, also holding as near-term support. We've been watching this since the start of the week as we opened up Sunday trade. We cited a bearish bias sub 11,902. We're going to continue to favor that. I'm just going to stretch it to the new low here. Again, not putting too much emphasis on it. We'll continue to favor the downside now below 11,893. Again, that's the median line with a basic 38.2 retracement. And if you look at this on the 30-minute chart, looks pretty similar. Okay, basically what we have is an opening range taking shape, and you're testing basically last week's low as well as that key support structure. So if we do break sub 11,830, you're looking for initial targets at 11,800, which is a basic 618 retracement, and a soft target here, 11,787. So key support range here on view, which suggests that near term, the dollar could see a little bit of a rebound, giving us that downside spout in the euro dollar, which would offer some entry, giving us a downside move in sterling dollar. I do want to caution you guys about taking a broad dollar focus against all of the majors. It's just not going to pay out right now. These pairs are all doing their own thing. So we're going to take each trade in and of itself on its own merits. As it stands right now, dollar index is testing, looking for possible break of near-term support here. So just a reference, even if we can't trade, we'll continue to eye this index above 11,830. Heading into yesterday's piece, here's what the Aussie dollar looks like. First on the daily chart. And here's what we look like yesterday on the daily. So the major resistance range, and what I said yesterday, I was even telling you, might get a little dicey here. We kind of rolled right through it. 74 was not only the 38.2 retracement of the entire decline, but you also had some median line structures here too. We didn't have enough tags of this median line that you see here to really stress it, but the median line off the high there, right in line. You had basic channel support or trendline resistance, came right in line. Okay, that's the October high day close there at 73.60. And we were looking to see if the RBA is going to charge the move. Ideally, you would have gotten a kickback here to 73 or not 72.80 to get the long. You did get a minor pullback, but it was really super minor. And the last one was basically that October high day close that you got right before the release. So here's what the scalp looked like last night. And here's what it looks like now. Okay, you got one final drop into the high day close. Obviously, the RBA came out, and there's the upside thrust. The commentary really didn't have anything in there. Besides saying that inflation was running low, they really didn't talk down the fact that the Aussie was rallying. They didn't really talk down any type of concerns from China, which is sort of like what we were focused on to look for. And markets took that as a bullish or a less dovish call, let's call it. As I highlighted yesterday, here's what the interest rate expectations look like yesterday. Here's what they look like now. And again, we don't like to stress these too much except when they're pertinent, but right now they are. And if we look at yesterday's Australia, we were looking for August as the first material expectation for an interest rate cut. Now, the first material expectation, meaning above 50%, is not until October. Okay, so you saw that interest rate expectation get kicked out by 2 months, and certainly the Aussie is responding in kind. So we have to do our due diligence on this as interest rate expectations continue to be the major theme moving these markets. So what does this all mean? So now interest rate expectations are kicked out further as far as when the RBA will cut rates next. There is an expected cut now at this point at October, 53.2% chance. You saw the July, August, September levels really whittle down from where they were yesterday. So from here, looking for the Aussie dollar, I am looking for some near-term support heading into 74, maybe even a tad lower into 73.95 or so, basically the upper median line parallel that we just broke out overnight. So there's a couple of things here. The same quote-unquote dicey levels that I was talking about yesterday on the way up, those should be support on the way down. So I'm looking for a pullback into this region to offer some long exposure. Topside objectives in that scenario, you'd be looking for 74.89, 74.90, very nice level. It's a very clean 50% retracement of the decline and that swing low that you made from the April opening range. Beyond that, you're looking for a rally stretch higher into 75.70 way up here. But first things first, let's see if we can get that pullback. Again, dollar index at support. So you can see a little pullback there, dollar rally giving us that entry, hopefully to get back on the long side here for the Aussie dollar. At this point, bullish invalidation is going to be 73.60. Okay, so if we break below this level, I'm not looking for long exposures anymore. Aside from it being the high day close, it's pretty close to where we opened up the week. And certainly a break below that level would invalidate the upside thrust here that we're seeing in Aussie. Any questions on the Aussie? Eileen says, I didn't take the trade on Aussie last night. Did you jump in during the release or no real stop area? Honestly, I would have, Eileen. I was not about to stay up till 12:30 on a Monday night to try to get this in. But yeah, I think I would have been pretty comfortable just taking a stop against the low here, even heading into the release against that low, just on account of where we were in momentum and just on account of the fact that if they didn't cut, and the commentary which came out was not very, it was benign. You know what I'm saying? Usually they come out saying, hey, look, there's Chinese concerns, global growth concerns, inflation concerns, the Aussie rally is hampering our ability to stoke inflation. None of that came out. None of that commentary came out. It was a pretty quiet release. So I think the lack of commentary is what charged the move. That said, Eileen, I would have loved to be in this trade. Again, I got to pick and choose my battles. Couldn't it have jumped the stop if it was commentary? It definitely could have, yeah. So it would have, remember, heading into the release, the idea was to get long as close as you can to 73 with our bullish invalidation basically at 72.80. That was on the slight possibility that they either cut or come out with dovish commentary, with neither happened. Neither happened. Let me see this on a 5-minute, see what it looked like on the release. Yeah, it was a pretty sudden move. It was a pretty sudden move. So on these moves, you got to pre-position. For those of you following the swing trades on SB, obviously we had an order entry to get in on the long side there, which didn't get triggered. That was also near the 73 handle. So these event risks are going to be like this, Eileen. You know how it goes. Sometimes you get the pullback, which is a great opportunity to fade. On these runners here, if you're not pre-positioned, it's going to be pretty likely scenario they're going to end up chasing it to the upside. So I don't want to tell you that it's a gut check trade, but that's basically how I would have played it. not confident in trading new stuff anymore. Why is that? Is that because something has happened that you've had a couple of bad experiences? Or remember, guys, when we're trading news, it is much riskier environment. So definitely, if you're not comfortable, I wouldn't advise you to get involved in these types of trading environments. But um, the levels are everything, right? So when we map out our levels, we map out key support, we map structural support or resistance. As the market moves, doesn't matter how fast it's happening, we want to see reaction to those levels. And the fact, again, that 73.60 continued to hold a support right into the release. It was a pretty topside break, but keep in mind, objectively, this could be a nice weekly opening range break, which does keep the focus higher while above this level. Yeah, so take a step back, Eileen. Says lots of risk for me, unfortunately. Yeah, take a step back. Um, and I guess I still try to predict. Yeah, that's the worst thing we want to do. Remember, we have our biases heading into the release, right, Eileen? So the risk of the release is either to charge a near-term movement against our bias or to accelerate it, right? So we're bullish Aussie. We've been bullish Aussie. We've been talking about it for a couple weeks. So either you're looking for a pullback to buy or a breakout. On the breakout scenarios, if the stop is not there to allow you to put in that quarterly ATR, then you got to pass it up and wait for the next opportunity. I think that's what we're going to do here. Let me just snap these levels for you real quick. Again, anyone who needs to take a quick freeze frame or a snapshot of the charts, do feel free to do so by clicking on the camera button in the top right-hand corner of your screen. Any questions on Aussie before we move off? As far as Aussie's concerned, you do get some data tonight. Home loans, not going to be anything major. Investment lending. Next major, I wouldn't even call it major. Next event risk of consequence, I guess, would be the NAB business confidence conditions. And that comes out on the 13th next week. So you're pretty quiet from Aussie data for the rest of the week. How soon before the release do you pre-position? As it's not really based on timing, Eileen, as much as it's based on price. So as close as I can get to a key support where I can put my stop a good distance below it and give myself a cushion. So that would have been on any one of these tags into 73.60 against that swing low that we made over in US trade yesterday. Because remember, when you see a reaction like this in price, by the way, this 73.35 level, that's not new. I didn't draw that in as a low. This has been a level we've been watching since last week's scalp reports. So the fact that we came right into that and saw that strong rebound, for me, it would have been pretty comfortable putting a stop against that low at the October high day close. It's stretching your ATR a bit, but again, you're heading into a major event risk, so you're going to expect to see that move is going to be more than a quarter of the ATR. So always be mindful of the trading conditions that we're in. And while we want to stay disciplined, we have to open up our horizons a little bit. If you're heading into a major event risk, a 20 pip stop is going to be really tight. And with the same respect, if you get a run, you're likely to get more than 20 pips on the run too, right? So stay dynamic as far as your positioning is going on to these positions, specifically heading to event risk. So I hope that helps. Aline says, okay, cool, makes sense. Right on. So a nice play here on Aussie. We'll continue to track this one. Looking for that pullback near 74. Again, 73.60 would be the max I'd want to see this thing drop for possible reentry. Next up on tap, and this one was a doozy, is Euro Oz. I'll go over Euro Dollar in a moment, but we did talk about Euro Dollar in the radar charts being at near-term structural resistance. So it kind of made sense to me to look at, all right, well, we're constructive Aussie dollar. Euro Dollar looks like it's at resistance. And this way it's kind of a synthetic hedge, right? If you're long Aussie dollar, you're short the euro, you're short the dollar. And with the same respect, if you're short Euro Dollar, you're long the Aussie. Or you're long the dollar, excuse me. So at this point, it made sense to kind of look at the Euro Aussie again. If you guys recall, we've been looking at this thing since early in May trade as this thing came into structural resistance. In fact, oddly and I guess ironically enough, we were looking for a rally sub 156.37 to sell. That was basically the high, guys. Here's Euro Oz as it stands right now in the daily. Okay, the high was exactly 154.44. So just 7-8 pips off. And then we pulled back dramatically last month. We kind of chopped around near the highs here for the remainder of the month into the June open. Here's what it looks like on the 30-minute chart. Here's what we look like last night. All right. So again, all throughout the month of May, this thing chop, chop, chop right along those highs. Again, 56.37. Excuse me, did I say 54.37? 56.44 was the high. 56.37 was the level we were looking for. That was an exact 1618 extension off the low. We caught that high late into last month. Basic trendline resistance, we were looking for short exposure below this. And again, near-term support was 53.60, looking for the downside break. So targets at 52 got taken out. Remember, this is the 200-day moving average and an exact 618 extension off the high. Okay, so look for immediate resistance here. Continuing to favor the downside, looking for a stretch into 52. Just below that, you have the 38.2 retracement at 51.85. So a nice 16 pip cushion here of near-term possible support. Major support would be down here. And this is the confluence of not only the basic lower median line parallel, which has continued to govern this trade rather well, but also a clean 100%, two equal legs down off the high. It's 51.30. Okay, now I have to say this, guys. Heading into this region, I would be looking for possible support, i.e. reversal, exhaustion, long exposure. Remember, the broader trade still remains constructive while within the confines of this formation. If we break here, I'd continue to sell rallies. But heading into this region, for holding shorts, we'll be wrapping that up, and we'll be looking for possible long triggers here on a dip into 51.32. So finally, back on the 10th, when we were looking at this thing, looking for that spike into 56.37, that alone didn't even happen for another 2 weeks. Finally got that spike. Then we sat here for another week and a half. Last week was a round trip. We closed almost unchanged. Here's the final breakdown. Let me just check, see what this looks like. Actually, not bad. So we just take basic channel, take a parallel off that, extend it off the low from May 16th. You can see that it converges more or less heading into tomorrow here, right along that 100% extension. Hey, Joe. Hi, Mike. Can you take a look at EuroCat? Sure can, man. Let me write that down. EuroCat. Sure. Any questions on Euro Oz before I move off? I really like this one. Has a very healthy 31 pip ATR. That's kind of our sweet spot as far as scalping is concerned. So looking to sell rallies initially below 53.60. I do want to note, guys, that this is a wider range ATR, so you could see a little bit more of a mean reversion type of like rebound like this before we continue lower. Long story short, I'll be looking for short triggers on a rally. Ideally, if we were in an ideal world, you would rally back right up into 53.60. Excuse me, 53.60, and you'd look for short triggers there for a final dip into that 51.30 level. 53.60 not only being the 236, which is not why we're stressing it, but that swing low from May 16th, that swing low, and then basically a nice pivot that we made last week. And would be sort of a nice region where you'd start to look for some short triggers for a final dip, like I said, towards 51.30. All right, keep in mind the momentum signature also looking pretty bearish here, especially on the rebound off of this trigger support that we highlighted. You saw that rebound hold right at 50, and there's the downside break, validating our near-term directional bias to the downside on Euro Oz. All right, moving right along. So, Joe, let me go into Euro Dollar, and then we'll jump into Dollar CAD, all right? So here's what Euro Dollar looked like yesterday on the radar charts. That's Kiwi. Okay. So we were noting some divergence into the highs here, and I still think you could get a decent pullback. Look, the outlook hasn't changed for Euro, which is why I have it on the on the radar charts. I still want to get long. This thing keeps just breaking higher. So, I don't want to start chasing it, but I'm kicking myself because I feel like we're going to miss the rally here. So here's the deal. We're still within the confines of this median line formation, loosely speaking. You saw a turn ahead of it. You saw the break late last week above the median line. We talked about this in the webinar yesterday, and the rally halting or at least being governed near term by a sliding parallel for the same operative slope, okay, that we've been following off the lows. So again, pretty decent pivot. Support, resistance, 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 support, 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 resistance, okay? And that level coincides dead on with the October high day reversal close. And if you want to see what that looks like, I know it's kind of a tongue twister there, but that's this region right here. So the outside day reversal that we made at the October high, the close of that session is basically what you're looking at right now governing this trendline resistance. So heading into that region last night, you have ongoing building bearish divergence as price action made a higher high in price. The oscillator making a series of lower highs leaves the top side vulnerable on the near term. Okay, still do like the opportunity of trying to get on a long on either a break into 1322, which is initially the opening range low at this point, but more importantly near that 1280, 1290 region, which would complete a basic 38.2 and a nice pivot in price here. So we'll see if we can't get that pullback in the euro to get back on the long side. Upside targets haven't changed whatsoever. 114.17 is a 618 key retracement of the decline. Got the May high day close at 14.42 and the actual May stretch high at 14.65. So they're stacked up right into that upper parallel over the next few days. So listen, we're going to keep this one on the radar right now. On its face value, here's a Sunday open. It's just a simple weekly opening range. And if the weekly opening range breaks to the downside, still be looking for that drop to offer some possible long targets or long entries in the euro. Questions on euro dollar? Okay. All right, so euro, look for the pullback to get back on the long side. I want to take a quick segue into dollar CAD. I don't have that, and then we'll jump into the euro CAD for you, Joe. So here's what dollar CAD looks like on the daily chart. I don't have the downside targets mapped out here. I'll show you in the 30 in just a moment. The only thing I wanted to highlight is the trigger break that we talked about yesterday in the webinar has continued to materialize with the move below 29.85, 29.76, which was a major support that we were looking at. Downside break here. I also just wanted to tack on, excuse me one sec. Okay. Okay, two equal legs down. If this is just a basic correction, takes you into 26.95. And I also want to just see a quick retracement here. Bear with me one moment, guys. 27.37 is the 618. Okay. And here's the 30-minute. So a little bit of a different picture on the 30-minute in that I have us coming into structural support here. I'll just look at that daily chart real quick. I didn't check out this morning. But if we take a quick parallel just off the highs that we made on the 19th, the 26th of May, and the subsequent high that we made this month early on the 2nd, you can see the lower median line parallel coming right in basically to where we bottomed out right now. Just below that, 27.37. To complete a 1618, it would drop it into 27 essentially. Long story short, I'm looking for some near-term support here in dollar CAD. The immediate support that we're checking right now could prompt a rebound. I don't have a play on this, which is why I haven't highlighted it on the intraday charts just yet. But you're marking divergence into the lows, price action lower low, lower low, lower low, series of higher lows, trigger resistance, and trigger support. So where do we go from here? Look for a rebound in dollar CAD to offer some possible short entries. Again, ideally, you get back into 29. I don't think you get quite that high, but if we do, I think that would be screaming short exposure just on account of the median line, the lows that you made here on the 26th, and a basic 38.2, which has been a decent pivot. So that would be an area of which I'd start to look for possible reentry on the short side. And I'd also highlight this region as our near-term bearish invalidation, meaning if we do see a breach above that, you're likely to see a rally right back towards the upper parallel, which could take you as high as 30.50. Not the likely scenario, not our favorite scenario, but certainly a rally here. You'd be looking for short triggers for an extended move, essentially, ultimately looking for a tag of 27.37 and 27. So kind of a little bit of a murkier picture, Joe, on CAD, on dollar CAD. So this is why Euro CAD might be a little bit of a trick here. But with that in mind, remember, a pullback here or a rebound here, this is CAD weakness. We've been talking about Euro, which is at near-term resistance, which could also see a pullback. So kind of leaves the bias a little on shaky ground. That being said, Joe, here's what Euro CAD looks like. On the daily, I think we talked about this yesterday in the webinar. I don't remember if we did or not, but nice reversal day. What's the high? 47.27. Here the high was 47.21. So it's an outside day reversal, not bad. That tends to be a nice bearish signal. Basic trendline resistance. Okay, let's bring it into 30-minute and see what it looks like. Wow. Okay. You see that median line formation? I guess we looked at this last week, guys. I haven't checked it out since, but really nice catch on that median line and overnight trade on that last dip we just made. Really nice pivots, right? Resistance, support, 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 resistance, resistance. Strong pivot off there. Just want to see if it's a retracement too. Okay. Okay, this is showing up as a big region near term. 44.65, which is last week's low. Near term resistance. Just bear with me, guys. It's going to get messy. It just takes 2 seconds. Just see what this retracement looks like. Okay. All right, these levels I'd be looking at here, Joe, for EuroCAD. So again, I don't want to stress this retracement, but a basic 618 is kind of where I would call this quits. So that'd be my near-term bearish invalidation level. One of those reasons is that it also coincides not only on former trendline support turned resistance here, but also the upper median line parallel. So this basic huge region is what would be the bearish invalidation level. So we want to see price stay sub 146.30. So you're looking for a rally to sell while below this region. First initial resistance coming up at 45.45 here on a top side rally. So like right around here. Joe, keep in mind, again, the near-term outlook for euro dollar and Aussie dollar kind of keep on dollar CAD, and euro dollar kind of keeps this a little bit more neutral on the immediate term. You might see some chop sideways, but broadly speaking, I would be looking for a short bias below 46.31. A downside break lower from here, like I said, 44.25, that key 618 retracement is sort of your initial focus on a move lower. Joe, does that help on euro CAD? Let me know if you have any other specific questions on this pair. He says, okay, Mike, cool. You got it, Joe, anytime. Also, I just want to take a look at this. Bear with me one sec. Wow. Almost a dead-on parallel with the current slope, but also gives us some room for pause here, right, on a possible rebound playing near term in euro CAD. Not bad. All right, so jumping back into the radar charts from last night, we did have an outlook on the British pound. Here's what the sterling looked like. It's funny to come in and hear all these, hear all these explanations for why they think, cable rallied so hard in overnight trade. Look, as we noted, it looked like the sell-off from the Brexit polling was a little bit overdone. We were looking for a rally with a little bit more push to the upside just to get into structural resistance. Now, this thing probed through and pulled back, but we're still trading below it. So you're basically looking at 45.88, which is the February high day close. We've been watching that level for quite some time, a few weeks now, and it coincided very nicely with the upper median line parallel. Again, this you'll never be able to trade. You'll never be able to plan for. This is just nonsense. Same thing with the Brexit polling that we got into the open of the month, or the open of the week rather. So from here, again, likely to get some pullback in the sterling, but I am looking to remain a little bit more cautious on the pound for now at these levels. Here's what the daily chart looks like for the sterling. Okay, so remember, this was kind of the last ditch effort to remain within the confines of this broader formation, and on a closed basis has not been invalidated yet. So I'm not getting too crazy about shorting the sterling from here. Our immediate focus last night turned to the upside just on account of where we were in price. And from this standpoint, you got the high day. What was that level? I'm sorry. This is the 2015 low day close at 146.71. That's sort of the major region of resistance. Critical resistance is right here. This is the 200-day moving average. And the yearly open, 47.30. Now, keep in mind, we've failed at this level 4 times since the start of the year, and they all occurred within the confines of May trade. So that's sort of the level to beat to get resumption for the broader uptrend. As it stands right now, you're at structural resistance. So again, you can see a scenario, as we talked about with the dollar index, which is trading at support. You can see a scenario where this thing pulls back. As far as entry on the long side, as far as structural support, you would need to drop into like 44.25. I don't think you're going to get 150 pips on a move today after this rally. So let's just tack on a quick retracement and see if there's anything interesting off the lows here that coincides with the level we're looking at. And sure does. I'd be looking at that 50. Okay, so 145. Remember, as we noted last night, 146.11, 146.10 was needed just to fill the Sunday gap. So we filled the Sunday gap. We broke even higher. When you're looking to play these gap fills, the typical play is to play the gap into the fill, right? So if you gap lower, take those longs into the fill. The way I like to play gaps is after the market has been filled, a breakaway of that key range that was just filled in the gap is the directional bias you want to stick with. So we gapped lower, we filled the gap, we broke through the gap. I want to stay constructive well above 145.04, 145.10, basically Sunday close and the 50% retracement. Make sense? Again, as far as the UK is concerned, you're pretty limited as UK data for today. Tomorrow, you get a pick up industrial production, manufacturing production tomorrow morning. And we'll want to be cautious with that. Looks like industrial production is expected to tail off a bit from last month's read, which could, again, manufacturing production, slight improvement. So it could, again, show some volatility here in the sterling crosses, but broadly speaking, look for the pullback into that gap again to see if we can find some support in pound. Comment here says, makes sense. Right on. Awesome. All right, and that is British pound. My notes say testing resistance and bearish invalidation at the upper parallel. Right. So this is still going to be our near-term bearish invalidation. A break above this, look for that key support that we noted on the daily chart. Last but not least, from last night, Kiwi Dollar. And it's going to be more and more exciting for the Kiwi as we get towards the RBNZ interest rate decision. As I always say here in the webinars, Wheeler is known. He is a talker, and he likes to really shake things up. So here's what the Kiwi Dollar looked like last night. You know, we've been trading within the confines of this really clean ascending median line formation, a little bit of a drift above and below. But broadly speaking, we were testing the median line last night, which coincided dead on with a 618 retracement and the weekly opening range lows. It's been a little bit of a mess as far as staying clean with that formation, but he did see a quick spike to the downside. Momentum held 40 on that drop, and then a rally into the this is basically midday in Asia heading into European trade. So first topside target is already hit. Remember, we want to stay constructive above 68.68, 68.63. That is still the bullish invalidation level. So we're looking to buy pullbacks while above this region. The initial target at 69.62 here has got taken out. Objectives beyond that, you're looking for the 70 handle. And obviously the actual concerted high for the month of May, and that comes in right around the 70.51, 70.50 region up here. All right, so looking to buy pullbacks in this pair above 68.68, looking for a stretch above 69.60 to get that final move into the 70 handle near term. That's sort of where I want to cut out long exposure. Remember the daily chart for Kiwi, we looked at this last week. I don't really like the broader picture here for Kiwi Dollar and where we are. And the only thing that I kind of stands in my head, again, is the 70 handle, right? This was a huge 100% extension from the advance off the lows that you made in September. You had a 50% retracement off the highs that came in right into a key range here, a 30 pip range of resistance. We rallied through it, both in April and May, before turning lower. So I don't want to stress this region as a hardcore ceiling, but if we zoom out, basic trendline resistance from the October highs of 2014, 1, 2, 3, 4, coincides on that key region heading deeper into the week. So any way you slice it, 170 70 handle, key resistance here in the Kiwi Dollar. Looks like we're set to post an outside day reversal here today. Again, this is not going to be anything that I'm going to necessarily stress. This tends to be more important when it's a bearish outside day reversal at resistance or a bullish outside day reversal at support. That is neither here nor there. So this could be an exhaustion stretch high. Long story, look for that final push towards the 70 handle. That's really where we'll reassess the whole trade there for the Kiwi. If that holds and you see a strong reaction off it on a real strong move to the downside, I'd be looking to sell rallies with a break below that median line. But as it stands, still looking for that final stretch here in Kiwi. RBNZ on tap tomorrow night. Or is that tomorrow night or night after? RBNZ is on the 8th, so that is tomorrow night. All right, so that is the setups that we've been following on the intraday charts. I do want to leave the session open for questions here, guys. If you have any pairs or setups that you want to review, a real quick look at the commodity block. U.S. oil has certainly been on the headlines as of late, and I'm sure you're going to continue to see that with oil continuing to move higher. You know, it's funny because there's such a delay in market expectations. You know, you heard people talking about the commodity sell-off, the huge drop in oil that we're expecting. You hear all these publications coming out with these longer standing reports that oil still might see a dip towards 27. You know, I don't know if that's going to happen or not. All I know is that on the immediate approach, 51, which we highlighted weeks and weeks ago, it still looks like it could be on tap, guys. It's a basic 100% extension off the highs. More importantly, at this point, it is the October high. Also, add to that structural resistance. The upper median line parallel converges right on that, heading towards the latter part of the week. Eileen says, regarding the New Zealand dollar releases for the 8th, not Thursday, Wednesday, the country needs a day to recover after Wheeler. Because the volatility, right? Yeah, we'll see. You know, ideally what could happen, guys, is Kiwi could rally right into that 70 handle on Wheeler, and then that would be like a great exhaustion trade where you'd look to fade that move. We'll have to see where we stand heading into tomorrow night. We'll give an update, obviously, tomorrow in the webinar to kind of recap where we are. But U.S. oil, you know, I would love to see a stretch into 51, an area start to look for a little bit more of a rigid resistance. Every time we've tried to call resistance on crude, it's broken up. The only structural resistance that is in view is 51. Okay, all the fib levels just continue to break. We were looking at the 50 or the 46 handle here, that broke. We were looking at the 618 key retracement of the entire drop, held for 4 days before breaking higher late last month. On a close basis, we've continued to sit on that as support. Resistance, look for that 5090, 5106 key region of resistance here for crude. As far as gold is concerned, here's what gold looks like on the weekly. Okay, I know you've seen this chart before. Not surprised to see some downside move here. I know that Jamie also highlighted this in the swing update last night. Here's what gold looks like on the daily chart. And turning just ahead of a basic 50% retracement of the entire drop off the highs here. You have channel resistance right in line with that over the next, well, actually into today's close. So you could see some further backside or back and fill here in gold before the next decisive move. I would expect to see that we could see a pullback, one stretch into a final high, and then a move lower. Remember, this is when sort of a lot of Elliott wave concepts tend to help a little bit, or tend to be a little bit more fruitful. Remember that in classical Elliott waveform, wave 3 is always going to be the largest one. So if this is a simple 1, 2, extended 3, you'd look for one last high before turning over again. I think that might be on the cards here for the gold trade. Specifically, if the dollar breaks down through key support, this would be, you know, an ideal stretch into structural resistance before turning down. Let's see any other commentary here on gold. See what the 30-minute looks like. Yeah, so look at that 1250 region. Even cleaner here on the 30-minute. Nice confluence there. You look for our last final push into this region before a move lower. Sort of would pan out really well with where price is trading at right now. Any questions on gold or crude? Okay. Well, if there are no other questions, we'll go ahead and wrap it up here. Keep in mind, guys, heading into the U.S. Open, you really don't have much on tap except into, I think we get crude outlook today, don't we? Yes, so at 12 o'clock you do get crude inventories and outlook. Keep in mind on that as we look at that crude oil trade trading just below key resistance into the 51 handle. That being said, there's really not much left on tap for event risk today. You do get some data out of Japan later tonight with GDP numbers as well as the trade balance. These are the final numbers for first quarter. We are expecting a slight upward. I guess let me just show it to you. Hold on one sec. Japan. Okay, so here's what Japan data looks like later tonight. So you're looking for your GDP annualized is the final print for the first quarter. Expected uptick from 1.7 to 1.9%. The nominal, quarter on quarter is expected to uptick as well. So we'll be looking to see if that prompts any movements in the yen. The yen crosses have been in great focus, and I know I didn't go over too many today. It's because kind of I want to see some of this pan out, but you got a lot of outside day reversals. Here's CAD yen with a massive outside day reversal yesterday, right off the May lows. You have Euro yen yesterday, same deal, right? Nice reversal day off of a fresh yearly low. Takes you right back into the yearly open, or the monthly open, which is what we're testing, a little bit higher. 123 would be the yearly open here, or the monthly open in euro yen. But my point being, guys, a lot of the yen crosses have seen some really nice reversal trades on the back of yesterday's move. So I'm not really a key fan of playing this right off the low. I do think it's going to fake out some people before you start to make any concrete evidence of a longer term swing here. But we'll definitely keep that in mind. Aussie yen looked like this. Let me just show you the Aussie yen daily chart yesterday. Another one, really nice, convincing outside day reversal off support. It's a longer dated 88.6 retracement. For me, on these outside day reversals, specifically on something like Aussie yen, where we are constructive, and you did see the yen being the worst performer overnight, I would love to see this thing finally clear the monthly opening range to give us a decent break. And once it does, it might be a decent recovery trade near term here in Aussie yen. But you have a lot of the yen crosses which are sort of tempting or flirting with a near-term reversal. We'll look to see if that gathers pace. If we do see some further evidence of that, I'll give you a highlight tonight. If not, we'll take a look back at these yen crosses tomorrow morning. All right, so guys, best of luck trading today. Again, I'll see you tomorrow at 8:30 Eastern. As always, stay prudent, and I will see you tomorrow. Cheers.